so assuming that you're new to trading, you're going to want to try and figure out how to profit from the markets. Now, this is a very, very simple thing, yet is overcomplicated for some reason, and my job now in this video and the videos that follow is to simplify how to trade the markets. Now, what we want to do is we want to start off with understanding what technical analysis is. And in simplest terms, technical analysis is nothing more than the study of financial markets and their price action. So every single candle that you see here on this particular chart of the S&P 500 E-mini futures is nothing more than participation. Where price action opened, where it closed, and the number of people that are trading contracts at a given time in the market. Technical analysis is going to be the thing that we're going to use to try to figure out how we can get into the prevailing trend. An example of a prevailing trend is this low to this high. This leg up is moving exactly that. It's going up to the upside. Our job is to figure out where in this particular chunk of chart we can use technical analysis to get in on that movement to the upside. We also want to understand how we can do the same thing for this particular leg up. And in every single one of these situations, technical analysis will offer us insight as to how we can potentially take advantage of getting on board with this movement and counter trend moves. Technical analysis is the study of charts, and it's very, very simple. Charts move in three directions. They move up, down, and in some cases, like right through here, sideways. Right through here, sideways. Right through here, sideways. In every single one of those directional movements, there is an opportunity to take advantage of getting involved with future price action continuing in the same direction as the prevailing trend. Prevailing trend, again, being that move to the upside. And these short little moves to the downside are what's referred to as counter trend plays. And those counter trend plays typically offers the best reward to risk entries to get long a stock. And you want to flip that thesis upside down to short a stock. So moving forward in the videos that follow, we are going to understand technical analysis a little bit better. We're going to understand how to develop a trade, which is very important. We're going to understand how to take advantage of multiple time frames to really add the probabilities in our favor or stack the probabilities in our favor. I want to also get you in front of how to pinpoint key levels on a chart. So you might not be able to recognize this at the moment, but at every single point on this chart, there is what's referred to as a key level of structure. And those key levels of structure offer me the greatest insight as to how I'm going to take advantage of the prevailing trend and the counter trend moves that follow. I also want to get involved with showing you how trade entries work with stop losses and profit target taking levels. These are all part and parcel of a technical approach to trading where we're using the technical analysis versus doing a fundamental analysis, which looks at the books and the profit levels and the structure of a company. What we're looking to do is take advantage of the technical volatility that prints each and every day on longer time frames, medium term time frames, and what I like to do, short term time frames where I'm scalping. And I'm going to get into the nuts and bolts of all of this. So the video that follows this is going to take this one step forward, and I'm going to show you how to actually develop a trading idea. So stay tuned and get on to the next video.